Hey guys, Rex Finance here. Today is a roller coaster if you haven't been able to tell. We also have a very windy day outside, so I apologize if there's a lot of wind noise. Let's just say if you drive a Prius, don't today, because your Prius would probably blow over, at least if you live in Nebraska. Ooh, there's a mailman. Mailman coming up. Hello. Yep, okay. Anyways, we're making money today, and inflation, everybody thought was just terrible. And this is something I discussed, I think it was 2 videos ago, but people are going to be so fixated on this year-over-year inflation figure, which in my opinion is a huge mistake. We should be focusing on the month-over-month figures and annualizing that figure, because we can't control what prices were a year ago. It's a terrible baseline for inflation. All that matters is that inflation is cooling off and coming down over the short term based on what the Fed has already done with their interest rate decisions. And we got 0.4% inflation month over month. Annualized, that's what, 4.8%, which is far less inflation than we've been experiencing. Month over month figures in the past have been 1.5%, 1.7%, in that range, which is really, really bad, because annualized, that is 12, 13% inflation, which is more representative of what inflation truly was anyways. Rather than these 7 and 8% year-over-year figures, we should have always been looking at these month-over-month figures. And I think that's a big part of the reason the markets are moving up big today. It's not like this is a low-volume buying spree. There is insane volume in the markets today, and I think it's because big money realizes this. They realize, okay, all right, still not great, 4.8% inflation annualized, still not great, but you know what? That's a far cry better from what we were in the past. So in my opinion, I think this could actually kickstart the next market rally, which is another thing I discussed 2 videos ago if you watch my channel. I think we could go on even if it's just a bear market rally, I think we're due for a rally and a big bounce in the stock market right now. So in today's video, I want to discuss 2 or 3 stocks, haven't decided yet, that I think are a good buying opportunity for this bear market rally. So without further ado, I'm going to eat some lunch. It's lunchtime. And I will be back with you guys very, very soon. We might go to McDonald's or something to celebrate the fall break and being done with classes officially. But we'll see. I'll keep you guys updated. See you guys soon in the studio.
Okay, I lied. I got Arby's, and I don't regret it. Subscribe. Okay, call me Sir Rex Finance today, because I'm wearing a fedora. Anyways, I'm not going to waste too much time covering the actual inflation numbers today, because unless you're living under a rock, you already know what those numbers looked like. But for those of you that do live under a rock, no judgment here. Inflation numbers, that's the wrong screen. But inflation numbers were 0.4% month over month and 8.2% year over year. And this was insane, because when the CPI data came out at 7:30 or 8:30 a.m. Eastern time this morning, prior to that, literally like 5 seconds before this was released, futures markets were showing that the stock market was going to have a really, really green day, like a positive 1% move at the opening bell. As soon as these figures came out, those futures dropped like 3%, and all of a sudden we were set to have a negative 2% or more day. Well, I don't really need to explain it to anybody, but we recovered fantastically throughout the day. The S&P 500 finished up 2.64%, and the NASDAQ finished up 2.35%. And again, as I referenced earlier, I think this big move upwards in this huge recovery today was warranted. We had 0.4% inflation month over month. Annualize that number, and that's 4.8% yearly inflation. Still higher than we'd like to see it, but a far cry better than what we're used to seeing at 12 and 13 and 14% inflation annualized. You also have the fact that basically everybody was viewing this CPI report in a negative light. Basically everybody had sold their stocks in anticipation and prior to the CPI data came out. And basically everybody was shorting the markets waiting for the CPI data to come out. So on top of the fact that the CPI data really isn't as bad as this 8.2% year over year figure makes it out to be, We probably had a lot of short covering happening today because everybody was betting against the markets when the CPI data came out. That's why being a contrarian is such a great idea in the stock market. That's what the best of investors are. They are contrarians. The Warren Buffetts, the Peter Thiels, the Peter Lynches, all of them contrarians. So this was freaking crazy today. I had to look this up, and this is the third largest intraday point swing ever. In the S&P 500, we swung 193 points today in the S&P 500, and the volume today was more than double the average volume. We had 142 million shares of the S&P 500, the SPY traded today in the markets. This was conviction-filled buying by somebody or a lot of people with a lot of money and a lot of power. The same thing goes for the NASDAQ. That had almost double the normal volume as well at 111 million shares traded today. And the NASDAQ also had a huge intraday point swing. There was so much commentary on CNBC today about how this rally isn't going to last, how we're just going to sell off tomorrow. This is fake. I am fading this rally. I am not touching the stock market after today. And to be fair, this is a very hard rally to believe in. How fast things switched today, 2 different times, from being green pre-market to deep in the red pre-market to finishing the day very, very green. There was a lot that went on today, which makes it hard to believe in what happened. So regardless of whether this is just a bear market rally, or maybe this is the long-term bottom, and we set that bottom early this morning, I think it is likely that we are set to see some sort of a stock market rally. So in today's video, I'm going to discuss 3 different stocks that I believe are tremendous buying opportunities, regardless of whether this is just a bear market rally or a long-term rally in return to the bull market. This video should satisfy literally everybody watching this video, so do me a favor and hit the like button. These 3 stock picks today are all growth oriented, and there's a very good reason as to why I am picking 3 growth stocks. It's pretty simple. They've been beat up the most by far out of any class of stock in the stock market. Recently, small cap valuations reached levels lower than the bottom of the COVID-19 pandemic and the scare there. Literally when investors were fearful of a global economic shutdown that would last longer than a year. Valuations got lower than that time period just the other day. The same thing can be said for mid caps. And generally what make up the small cap and mid cap companies are high growth companies. It's also common knowledge that growth stocks tend to have the biggest swings, whether that's to the upside or the downside. A lot of us, unfortunately, have experienced both over the past couple of years, where a lot of us bought coming out of the COVID-19 pandemic, and we made a lot of money on growth stocks, and we're outperforming the markets like crazy. And then over the past year and a half or so, the opposite has happened. If you have held onto growth stocks throughout this time period, it has been miserable. You have underperformed the markets miserably. And that is saying a lot because the markets are down themselves 25 to 30%. So whether this is just a short-term faker rally or a long-term rally, growth stocks will perform the best out of the group if you are buying quality companies that have little risk of bankruptcy. Right now, there's an opportunity out there where valuations have been crushed in so many stocks, yet fundamentally, they are better now than they were ever in history. This is what I like to call the bubble of opportunity. I know, cringeworthy, but it is a bubble of opportunity. When valuations don't properly reflect fundamentals, that is when you can make a lot of money as an investor. All right, let's dive into my first stock pick here. The first one I'm going to talk about is NVIDIA. This is down 65% from its November 2021 highs. 65%. And this is a $300 billion company currently. That is crazy. Now, do I think NVIDIA's fundamentals are better than they ever have been? Absolutely not. I mean, we had AMD come out just recently and slash their revenue guidance by $1 billion. Things are not pretty in this industry, but I think the valuation has been crushed way too far down. And you'll see I actually threw together an entire price target spreadsheet for NVIDIA Corporation, which I'll dive into in just a second. But this basically boils down to lots of bad news already being priced into Nvidia. Think about it, down 65% from its highs, and this company has zero risk of going bankrupt. They pay a small dividend, and they have an active share repurchase program. I have this company growing at 15 to 20% basically after this next 12 months or so, which might be a little bit rough for Nvidia, but you can see that is really, really good growth. This is a growth company, and I think the valuation has been crushed far too much. Now, with this spreadsheet, I've made this spreadsheet available to all of my members. I will leave a link in a pinned comment down below where you can join this membership for $3 a month, but there are only 18 spots available for that special. So get on your horse, join the membership really quickly. That's nothing, $3 a month. And I don't think there's anybody else out there that provides spreadsheets like this, along with a lot of other quality stuff. Call me biased, I don't care. But if you don't like my growth assumptions here, you can go ahead and change my revenue numbers. You can go ahead and change my market multiples. You can change my earnings multiple, my sales multiple. Anything you want to make this spreadsheet fit what you believe is going to happen for the company. I've even considered a 1% reoccurring share buyback annually for Nvidia, and we can see that my price target for 2022 is $162.93, which means the stock, in my opinion, is 36.23% undervalued. Now, an important point about my price targets is that this price target is not a prediction of what price Nvidia is going to be and when it's going to hit that price. It's essentially me saying that I am willing to buy Nvidia stock so long as it's cheaper than $162.93. All right, my second stock pick is actually a group of stocks and maybe even a commodity. I don't know what you consider Bitcoin, but it's crypto, Bitcoin related stocks. I think those are going to be tremendous buying opportunities because there's one thing that we know for certain, 100%. It's that a market rally is not going to happen unless Bitcoin contributes. And that's because Bitcoin is considered a risk-on asset, which it is. It's a risk-on asset currently. So I think if you buy Bitcoin itself, it will end up being a tremendous buying opportunity, but I think you could actually get some additional upside by buying Bitcoin-related stocks instead. This could be something like Coinbase, ticker symbol COIN, which is a cryptocurrency exchange, and they recently signed a partnership deal with Google. This company is here to stay. And honestly, this is another example of a company that has sort of been priced for bankruptcy in a way. Ever since its IPO, this stock is down 79, almost 80%. Yet this company is still in a very, very healthy position, especially if Bitcoin prices in the crypto markets recover. Yes, buying Bitcoin-related stocks is very risky. There's a chance Bitcoin and cryptocurrencies could absolutely flop and fail, and you would probably lose all your money. That is something you need to consider. I, for one, am a believer in Bitcoin. I believe Bitcoin is here to stay, and I think the future for Bitcoin is very, very bright. But if you don't believe that, don't buy these stocks that I am mentioning in today's video. The bottom line is Bitcoin-related stocks are some of the most volatile stocks in the entire stock market, with lots of Bitcoin mining stocks down 80 to 90% or more ever since their highs. For example, you can look at a company like Marathon Digital, which mines Bitcoin. Their beta is 5.15, meaning if the overall markets move up by 1%, Marathon Digital stock is going to move up by 5.15%, 5 times the amount the overall market moves. That is simply unheard of anywhere else in the stock market. That is painful when the markets are moving down, because if the markets move down 1%, Marathon Digital is moving down 5.15%. And we have seen pain in Marathon Digital. From their highs of almost $80 in November of 2021, Marathon Digital is down 85%. But the best time to buy these highly volatile stocks is at the bottom of a market, or if you think the market's getting ready to rally. Now, I would not put all of your eggs in one basket here. That would make no sense at all. This is a very risky play. Any stock you buy that is related to Bitcoin. I, for one, like CleanSpark the most out of any of the Bitcoin mining stocks, and that's for one reason. They have very, very little debt on their balance sheet, which means they have very few obligations and things they have to pay, which means their bankruptcy risk is very, very minimal. This company has also avoided the trap of share dilution in a bear market that can absolutely destroy investors and honestly delist companies if they're not careful doing so. CleanSpark has been very, very careful about diluting shareholders, and they've been very, very very opportunistic in this bear market. They're the only Bitcoin mining company out there that has been going on a buying spree, buying more Bitcoin mining rigs, acquiring other Bitcoin mining companies. It's been a fun sight to see. If you guys want to learn more about CleanSpark, just go to my YouTube channel. I've talked about them endlessly. And lastly, I have ChargePoint Holdings, which operates the largest online network of independently owned electric vehicle charging stations, operating in 14 different countries. That probably looked like 41 to you. 14 different countries, and makes the technology used in it. This is a $4.6 billion company, and this was a former SPAC. This was one of the first SPACs to really pop off when those were popular, but since their highs in December of 2020, they are down 70.7%. This is another pretty risky play. However, I do believe that the downside here is limited. We all know electric vehicles are more than likely the future at this point. And we also know that the government is going to provide subsidy after grant to any company that has anything to do with the electric vehicle network or industry. So essentially, my thinking here is that the US government is not going to let a company like ChargePoint go bankrupt and cease operations. It's not going to happen. I, for one, am a capitalist. I'm a proud capitalist. I wish the government wouldn't bail out companies, but as an investor, it's something you have to consider when you're doing a risk analysis of a potential investment. This one is pretty risky to put a valuation on, particularly because they're not expected to reach profitability until at least 2025, which is a few years away yet, and that makes it pretty hard to guess what this business is going to look like in future years. But personally, my personal estimation is that this company is going to continue to grow at around 50% annually for several years to go in the future, and that's revenue. And you can see in the spreadsheet, I break that down by network charging revenue, subscription revenue, and other revenue like different grants and stuff that they might receive in the future. I have an assumed annual reoccurring dilution figure of 10%, meaning I think they're going to authorize and issue and sell 10% more shares every single year to the public markets, which puts a negative pressure on the stock price of the company. But even so, my personal price target or fair value of the company sits at $28.27 this year in 2022. I have blacked out the PE valuation table here because, well, they don't have earnings. So we're basically basing this entirely on a price to sales valuation here. And this makes the company 109, almost 110% undervalued in my personal opinion. This $28.27 does not make the company go back to all-time highs. And again, all this means is I am willing to buy the company so long as it's less than $28.27 per share this year in 2022. Let me know down in the comment section below what stocks you are currently buying or plan on buying in the near future. I would love to hear all that you guys have to say. Also, don't forget to join the membership. $3 a month. Come on. 18 spots left. Jump on the opportunity. I would love to meet you and talk to you tonight. And with that, if you enjoyed this video, please hit that like button for me. And if you're new here, returning and not yet subscribed, you know what to do. Subscribe. With that, have a great rest of your day. Stay blessed. 10 toes to the ground. Chin up. Peace out.